All right, let me check. Is everything all right? Can everyone hear me as well? Hello, hello, hello. Yes. I cannot see the chat, by the way. Ah, here it is. Here it is. Everything all right? Perfect, perfect, perfect. All right, I changed a few settings so the quality of the live stream is a little bit lower, but at least we won't have the lag disturbing us. Everything's well? Perfect, perfect, perfect. All right. Hey, what's up, Tori? How are you doing? I'm doing great, brother. How are you? How are you? Love to see it. Love to see it. Let me see. Legs up, good to go. Perfect, perfect. All right. Perfect. All right, so let's go over the forecast again. Again, if you have questions, then feel free to drop it in the chat and we can go over it afterwards as well. So I was talking, or we were talking about the dollar right here and the economic calendar. Let me actually go over it fully again because this would be a separate live stream on YouTube as well. So for you not to miss anything, let's go over the economic calendar again. We mentioned US dollar red folder news on Tuesday, Wednesday right there, and Thursday and Friday as well. But Friday has NFP. So Tuesday, Wednesday, perfectly fine to trade. Monday as well, if you find any of the crosses, CHF, JPY, for example, perfectly fine to trade. Then Friday and Thursday is where I want to be a bit more careful because that is where NFP comes into play. So NFP right there is perfectly fine to trade after the news release, not on the actual news release itself, not before for me. I want to trade after it. So that is also what I am looking to do right there. Other than that, it's looking quite nice. It's looking all right. It's looking all right. Now, with that being said, it is again right here important to understand that we have this monthly value gap on the dollar, and we mentioned the candle signs, the mentorship concept that we went over right here, that we are currently respecting that right there, this monthly value gap. Now, that's the first step, and that's again a general rule of thumb. We need the lower time frame, and the lower time frame in this case, we need the weekly, the daily, the 4 hour, etc. to agree that we want to actually continue lower right there. That's why we're looking at the monthly first right here, to then go into the weekly, because let's see what the weekly is doing. The weekly is showing good signs, and what I mean by that is we had this weekly value gap. So again, if we want to continue higher right there, then we will want to continue higher off of this weekly value gap. If we want to continue lower, then we will continue lower off of this monthly value gap. What does this lead to? This again leads to overall 50-50 price action right there, where we have a video that is called Don't Get Trapped in 50-50 price action. This again is 50-50 price action. And that's what we're seeing this week as well, that it is just lower probability. Now, right here, if we then go into the daily, what are we seeing again? On the daily, we are seeing that we have not created a daily value gap lower just yet. So the monthly and the weekly are showing potential bearish signs, but the daily is not supporting the ID just yet, as in we don't have a daily value gap just lower yet. So the thing here is that I would love to wait for a little bit more confirmation towards the downside, especially after this consolidation like we are seeing right there. I want to wait for a little bit more confirmation towards the downside to potentially look to get involved as well. So right here, I do still think we can continue lower, and I am expecting lower prices. But the thing here is that where are we going to continue lower from? Do we have the right confirmation? That's not too clear. And that is something we can also very well see actually, not only in the previous week, but definitely last week. Last week for me was a difficult week. And I mean difficult week as in I was expecting just price to continue lower very comfortably, which it did not do. This was a losing week for me. I took one loss on Nasdaq. After that, I did not trade anymore. I just didn't like the week anymore, and I was just not in sync with the market overall. So right here, this is where I want a little bit more confirmation as well to comfortably and to have that confidence again that it does want to continue lower right there. In the meantime, let's also set an invalidation level, because again, if we now start to create bullish fair value gaps right there, especially on the daily time frame, then that will be very suspicious, and then I would look at higher prices actually. So I would want to see the next few candles, which is also candle science, which we did not touch on in the video actually, because candle science is also what are you expecting the next candles to do? When are you expecting the next fair value gap to be created? Where here, after this candle, when we have new support in ID on Tuesday, we should ideally expect an expansion phase of a new fair value gap to be created. So at the beginning of the week, we should move lower quite fast, as in we should move lower at the beginning of the week, creating a new expansion phase of fair value gap. Again, expansion phase is the second candle of the 3 candle pattern that is called a fair value gap. So that is what I would be expecting right here, where we can definitely look to continue lower right here if we can get a nice premium rate as well. Now on ES, we mentioned this fair value area last week. We mentioned that fair value area. Now that fair value area is the one that held eventually, but right here again, the delivery in my opinion was just not the nicest overall. I didn't like the delivery that much right there, and also did not manage to get involved right there after the first loss on Nasdaq for me. So eventually right here, the same story goes, where we can just look to continue higher. We have a new fair value area right there, which we can again look to continue higher off of. Fair value gap being created right there, ideally after Monday, staying into the fair value gap to then continue higher off that, perfectly fine. Now there's one thing though, because after a while, you would not be expecting the fair value area to be traded back into again. And what I mean by that, price will not act like this. Price will not keep on offering every fair value perfect before it continues higher right there. That's a utopia, and the market is not a utopia. Nothing that we do works 100% of the time right there. And the reason this does not work 100% of the time, because eventually what we are doing is we are building up liquidity on the downside when we have moves like this. But what is that liquidity on the downside? Well, you could argue, and a lot would argue, it's trendline liquidity right there. But I would argue what we are doing when we are continuing higher like this on a daily time frame, for example, eventually what happens is we will create monthly fair value gaps and weekly fair value gaps that are below those lows right there. So that is when we will sting into those to then continue higher off of that, which is oftentimes, again, I'm not sure if you saw my reel or my short on YouTube and Instagram. Oftentimes it's quite overcomplicated, where it's just a move into a fair value gap to then continue higher off of that. And that's exactly what happens very often, because the more time, of course, the more time ticks, as in the more time goes over and over, the more fair value gaps we are creating. So the more liquidity we are also creating, because we can sting into those fair value gaps right there. That is why holding those fair value areas constantly is also not the best thing in the world, because right here I would want to see price just explode higher if it does want to continue higher and not come back towards fair value areas constantly. Because if it comes back again, then I would expect monthly fair value gaps eventually and weekly fair value gaps to be traded back into as well, where we are creating a nice monthly fair value gap right there overlapping with fair value area. It's very interesting. But for this week, this fair value area with the fair value gap that we are creating is very interesting to play around with. Then on Nasdaq, it's the same thing, where overall we were expecting higher prices. On Thursday, we got the higher price right there. Friday, also expanding higher right there. We have a new fair value area right here. This would need to have quite a big retracement for it to come into that fair value area. And what I mean by that, if Monday somewhat of a consolidation right there, then Tuesday and Wednesday would need to be a big retracement right there to continue higher. So I would almost expect only the fair value gap itself to hold right there, because the retracement, the heavy retracement, would almost need to be that heavy that it would almost make a top in the market, where it almost needs to create a bearish fair value gap coming into the fair value area, which is not something I want to see. So let's see on YM. YM right here is definitely quite interesting. It's one of the weaker ones, where we also mentioned the fair value area right there, came into the nested order block right there. A nested order block or nested PD ray is on the right side of chart right there. On the right side, we have this order block in between the bigger order block that we see to the left right there. So there's a smaller PD rate in the bigger PD rate that we are seeing, which for us, or for me at least, is the fair value area, which is also technically an order block right there. And that makes 3 discount rates. It's a very strong area where we can continue higher off of, at least expect a rejection. So right here, we can definitely go into the lower time frame already, because if we want to continue higher right there, then let's see where we want to continue higher from. Now, this price action is not interesting to me. And the reason I mentioned that is because this is just one big consolidation to me. This 4-hour value gap could be interesting, but after seeing this price action, it again becomes a loyalty test, as I always like to call it. If you follow along with the forecast, you'll hear me mention this often, where one fair value gap that is coming out of nowhere is not enough to comfortably trade towards one side all of a sudden. Where if price action before that was very ugly, then one fair value gap might not hold, because the previous fair value gaps, etc., also did not hold or did not get created. So it's very important to understand that, because then you would require a little bit more confirmation of that fair value gap instead of going into the 1 minute time frame and every 1 minute ST you would try to trade it, right? That's not what we want to do. So I want more confirmation of that 4-hour value gap if we do want to continue higher. So this is definitely one of the weaker instruments, of course, like we mentioned as well. So be careful with that as well, that it might not reach the high even right there if Nasdaq and ES makes a heavy retracement. So if Nasdaq and ES make a heavy retracement right there, then YM will do something like this to then potentially continue higher. So be aware of that as well. Then on DAX. DAX has just been exploding, to be honest. And it's quite refreshing to see, I would argue, because DAX is a pair that explodes, then consolidates. It's very similar to Bitcoin. Bitcoin also explodes, then consolidates for weeks and weeks, then explodes again. It's the same with DAX. So DAX right here is at all-time highs. And any pair that is at all-time highs, any instrument that is at all-time high, I do not like it. And I'll tell you the reason why I do not like it. It's also something you'll hear me mention quite often, is when we are at all-time highs, you're either usually, just as a general rule of thumb, you're either trying to call a top in the market, so you're trying to look for shorts where we are just exploding higher, so there's no reason to look for shorts, or we are trying to chase price because we are at an all-time high, so price is just exploding higher. So the best thing to do here, and when we are at any all-time high, is to just simply wait a lot of times. And with Nasdaq, etc., it's currently the same, where I would want to wait for a clear retracement into any daily value gap. And it's the same for DAX right here. Daily value gap to then have a clear retracement into that creates a new high that we can target. Where currently we do not really have any clear target anymore. So if we do come into a daily value gap to then continue higher off that, that is exactly what I would want to see. But again, when we're at an all-time high like this, it makes it a little bit more difficult because we do not have nice targets where we can expect this daily value gap, for example, to hold, or now coming to the overlapping part, makes it a little bit more difficult. So that's why I usually stay out of markets that have recent all-time highs if they do not have clear targets anymore. And by the way, again, that's the same for the other indices as well. Take that into account. Forex right here, if we look at Australian dollar, US dollar, we can see actually it's quite disappointing price action, to be honest with you, because the last fair value gap that was created was on the 15th of February right there. That's quite some time ago actually. And that indicates to me, when we are failing to create those fair value gaps right there, that overall we just have ugly and more low probability price action. So here I also do not like the price action currently, and last week we did not get the confirmation I wanted to see overall. So right here I simply want to wait. I want to wait, very simply said. I want to wait to see if we want to continue higher. If we want to continue higher, we will most likely respect this fair value gap to continue higher off of that right there, creating a new fair value gap. If we manage to do that, I would be more than happy to get involved on the next fair value gap sitting right there. But in the meantime, this is not a fair value gap that I'm interested in. It's just low probability. Again, leads me to the loyalty test, where not every fair value gap is a fair value gap you want to trade off of. And simply said, because if we have been disrespecting or not respecting fair value gaps with a lot of accuracy, where we see this fair value gap right there, we see that small fair value gap, that small fair value gap, they all get traded through. So what would now all of a sudden magically make this fair value gap a strong fair value gap? No, for price to sort of convince us again, I would want to see one fair value gap that is traded into, that perfectly and very nicely holds and pushes price higher with a new fair value gap right there. Not trades through it right there to then continue higher. It's not what I want to see. So here I want to wait to see what we do with that 4 hour fair value gap. On EU, right here, again, overall I'm on EU, on AU, I'm expecting higher prices, but I just need price action to clear up a little bit more to actually be confident enough to take a trade for longs. Actually, that was quite interesting. Actually, this was posted on Twitter, actually, not by me, but by some people, and the argument was, what would you do here? And I replied, I would go touch some grass. I did not know it was EU, actually. And right here, I don't really want to get involved. Again, it's the same story as AU, where every fair value gap that we have been seeing in recent price action just has been disrespected, has not been strong enough to push price lower or higher. So right here, I want to wait for this fair value gap to create a new fair value gap right there, for me to be confident again that it does want to hold and that we do want to push higher right there. It's better safe than sorry right here. And what I mean by that is, oftentimes you'll see traders, they try to catch every move. And well, there's nothing wrong with that. If your RR is on every trade is 1 to 100 RR, my RR on most of my trades is 1 to 2 RR. I can't take 3 losses before I take my next winner. And that's such a simple mathematical equation. But if I take 3 losses and I take a winner, then I'm in drawdown. Then I'm in minus 1%. So I need to be picky, because otherwise I will just end up in drawdown. So that's very simply said, I cannot afford to take or a risk on every single trade right there. I do not want to, because that will lead to drawdown overall. Where yes, I will take winning trades, but it's about avoiding losses. And the more you go on in your trading journey, the more you'll realize trading is about avoiding losses, which of course comes hand in hand with then also finding winners. But don't get impatient and try to rush into the market where the market is just not ready to do something. So that's very important. Avoid losses at all costs, which eventually finding the winners is not that difficult. Everyone can find winners, but it's avoiding losses. That is the key. Right here, GU, overall, very ugly price action. I like EU more. And even though EU recent price action just also has been horrific. It's just this year, actually, to be honest with you, this year, the price action has not been the best. If I am honest with you, on EU and the majors, right there, price action has not been the best. Where indices, I would argue, has been quite interesting. A lot of the cross as well, quite interesting. But EU, GU, I would argue more. Been quite difficult, GU right here, we can again look to continue higher right here. We are coming into a fair value area, and the fair value area is this right here, which we can continue higher from. Now, to get that confirmation, it's the same thought process again right here. 4 hour fair value gap right there, which I would want to see confirmation to continue higher from. Ideally, a new fair value gap after that as well. Then New Zealand dollar, US dollar right here. We have this daily fair value gap. Now, will that daily fair value gap hold? I do not think so personally. And the reason I do not think so is because that daily fair value gap, then we also need the dollar to agree with the idea that the dollar wants to actually continue higher right there. And if the dollar wants to continue lower right here, the New Zealand dollar, US dollar will actually continue higher. So this right here is not super interesting to me, purely because the dollar has been so unclear right there. So again, it leads to the same story, loyalty test overall. Daily fair value gaps have not been holding right here. When is the last time we got a daily fair value gap right here that we created a new daily fair value gap off of? Let's actually see that. We have this daily fair value gap. We tried to push higher, did not create a new daily fair value gap higher off of that. Then after we have, well, the last time was this price action right here. Was at the beginning of the year actually, where we came into it. Even that I would argue is quite ugly price action. After we created new daily fair value gap higher off that. So it's just not price action where I currently want to get involved in. I want to be a lot more careful right here as well. where this is definitely not something I am very interested in, because if the dollar's going to continue lower, which I am expecting in my forecast, if I'm wrong, I'll adjust it. But if I'm expecting low price on the dollar, then right here, this can just continue higher. So that's not in sync with my forecast on the dollar right there. So I do not want to do anything right here currently. I want to wait. US dollar, Canadian dollar, also very interesting overall. We are constantly struggling, really struggling right here above those highs. As in, we are not really running those highs. We're constantly sweeping those highs, big retracement to then continue higher off that. I mentioned this, what is that? There's a daily swing high, I believe. Is it something on the monthly actually? Something on the monthly? No, not really. On the daily, it's a swing high right there, which we could target overall. Now, again, I'm not super interested in this price action right here. I would want to wait, see what we want to do with the fair value area right there. We want to respect that if we want to continue higher off that. Again, currently I would argue, no, we do not really want to respect that right there. It does not seem like it. But the price action here has been like that for weeks and almost months right now. So if we want to continue lower, then we have, again, this fair value gap sitting right there, which we can continue lower from. Ideally, and better safe than sorry, if you're not too sure, then just wait for another fair value gap lower right there to continue lower off of that. That is what I would want to wait for personally. US dollar CHF right here. Let's see. Now, this actually becomes quite interesting. And the reason I say that is because if we actually delete everything right here and we start over again, then what we are currently seeing on the monthly, this is a previous month's high, which again is just a premium array in itself, right? So on the weekly, that is a weekly swing high right there, which also coming into overall order block again, like we were already coming into. After that, we can look to potentially target this weekly fair value gap sitting right there, although that's quite far currently. So I would argue let's first use previous week low right there as a target. And on the daily time frame right here, we have a daily fair value going against us. Now this becomes very interesting. And the reason I say that is because right now we are sweeping this high. We are respecting that high. Can you see the candle right there, the respect candle? So what can the next candle do? Next candle can continue lower towards the previous day low right there, but then it will run into a daily fair value gap. So what do we do in that case? We are sweeping the high, we are running into a daily fair value gap. We need to wait for either one to get disrespected, to show signs that we definitely do not want to continue higher or lower off of those PD rates. So in this case, this daily fair value gap right there, how can we see it is being disrespected? But once we come into it and we get disrespect candles, like we mentioned in the previous video, then that is a great sign that we do not want to continue lower. What would that look like on the lower time frame? Well, you might get a 15-minute ST higher, where you get some confirmation like this, and we try to push higher and we fail. So where there is fake confirmations, there is failure of PD rates. And what I mean by that again, is if we go into the 15 minutes, oftentimes when we then come into those daily fair value gaps, a usual confirmation, what I want to see is a sharp turn right there to then have a new leg higher. That is what will fill. So the sharp turn will potentially happen, and that fills right there, then showing a new sign, and that fills again right there, just slowly disrespecting the full PD rate, which eventually leads to a daily close right there, fully disrespecting the PD rate itself. So right here, that would be the ideal sign. Now, the other sign, if we do want to continue higher off that, then the ideal sign would again be a candle close above the daily fair value gap right there. So the wick, like we see. The wick, the exact same wick like we're seeing with that sweep. I would want to see lower prices right here. I would ideally want to see lower prices right here. And that is very interesting. I do quite like the sweep that we are seeing to then continue lower off of that, targeting those lows. I actually quite like this price action. And if the dollar wants to finally agree, this can be very interesting. Very interesting. US dollar JPY. Let's see. Messy. And not messy as in the footballer. This is just very ugly price action right here. It's messy price action right here. Let me see. The monthly overall, it's still quite nice. As in it's not ugly right here, the monthly. Monthly can still just simply continue higher towards the all-time highs right there. Then on the weekly, we are seeing a sting into a weekly value gap. And again, that's also not too crazy, right? Overall, the monthly, the weekly are quite interesting. But then the lower time frame delivery has just been a difficult one, as it has been quite ugly overall. Now, on the daily right here, we're seeing a nice rejection high. That Friday right there, previous candle, the recent candle can continue higher. That's perfectly fine. On the 4 hour right here, I would want to see if we do want to continue higher right there, a new 4 hour value gap higher off that. But what may you notice that I'm currently contradicting my dollar analysis again. So that makes it very difficult actually, because we have all those highs right there, very nice targets actually, but those targets will not get taken out if the dollar wants to continue lower right there. And I'm expecting the dollar to continue lower. So can I reasonably expect USD to continue higher right here and contradict my own forecast? No. So in this situation, don't get too caught up in this. Don't overthink it, because a lot of times, well, from my experience at least, then you might still think, all right, but let me just try to trade that. Just avoid it. If there's any contradiction right there, just avoid it right there. That would be my advice. So right here, I do not want to trade this. I would rather trade something like US dollar CHF right there. Which was actually quite interesting. Or EU, which was also all right. Silver. Let's see. Silver, we finally have higher prices again of the breaker that we are seeing right there on the daily time frame. Let's actually go up in time frames a little bit as well. Delete everything again. On the monthly right here. So a very easy thing again, like we mentioned in the previous video, is a very easy target can be previous month's high, previous month's low. So if you're not, or you're struggling with buys overall, you're struggling with drawn liquidity, my advice would always be mark out previous month's highs and previous month's lows, and do that, well, also of course weekly, previous week's high, previous week low right there, and see which one we want to trade towards. So if we do that actually right here, then the story sort of writes itself, which is very interesting. And this was for this candle. Now let's move it to this candle right here. And you can do the same for every PD ray on your chart. And don't get too crazy. And that's also why I don't use a lot of PD rays, why I don't use inverse value gap, etc. Because the accuracy is lost in my opinion. But if we mark out the swing highs, the fair value gaps in recent price action right there, then the story again writes itself, where it becomes very easy to tell you, oh, okay, we are now sweeping that previous week low. At least that's what we did the previous weekly candle. So after that, it's more realistic to now continue higher because we're sweeping that discount array right there, respecting it to continue higher towards the next previous week high, towards that swing high right there. So on the daily, we can do the exact same thing. On the daily, what are we doing? We have this disrespect candle right there. Perfect. So this is actually the same high right there. And the low right there is a little bit more refined. So it's more realistic in my opinion. And well, I would argue that a 4-year-old could see right here where price might want to trade towards. And I don't want to sound like a know-it-all, and I don't want to sound disrespectful. But if we were just to simply ask ourselves right here, well, which lines do we think price is going to trade towards? I think it's going towards the highs right there. Most likely, right? Because we have been going higher in that price action right there. So again, then it becomes quite simple overall to understand where we potentially want to trade towards, at least the probabilities. Will we trade towards the highs? Who knows? We might not, but the probability is higher that we trade towards the highs, and everything is about probabilities. So right here, we can even create a daily value gap higher. On the 4 hour, we already have a new 4 hour value gap higher right there as well, which we can then use to continue higher from. So that's again, another method of getting towards your bias to then your narrative. And this creates your context as well, because when we come into that right there, that then creates the area from this discount array towards that premium array in the form of the highs right there. That is the area where lower time frame entry patterns, if they do form and the confirmation is there, they hold right there. In other words, your market will make a buy model. Then afterwards, what we see is the entry pattern, the risk management. So that's basically everything checked off for a trade ID. So silver right here is actually looking quite interesting. I do really like this idea right here, trading towards the highs right there. I do quite like that. Then gold. Gold has just been continuing higher as well. as expected right here, ever since we got the sweep of these lows right here. And let's actually see. Let's remove everything. Start on the monthly again. Start fresh. Then we are already above previous month high. Now this is actually very interesting because again, when we are above a previous month's high in the form of this high right there, we do not need to wait for a candle close again to see if we want to disrespect that high or if we want to respect the high. See if it will be a sweep or a run on liquidity, which again, this is just seen if we want to continue higher towards the next premium array. That is seen by looking at a sweep versus a run, because that on the lower time frame, this previous month high is what? It's just a swing high. So that swing high right there is where we can now look for either a sweep or a run on liquidity. Well, I would argue we are currently running that liquidity, meaning that we are aiming for a next premium rate. Whenever we run a high, we are then aiming for a next premium rate, or when we run a low, we are aiming for a lower discount rate. For example, if we were running this low right here, we would have aimed for this low right there, the next discount rate. But we are not running that low, we are sweeping that low. So then the target changes from discount arrays to premium arrays. So right here on the weekly, do we have anything interesting to continue higher off of currently? No, not really. Then on the daily right here, do we have anything interesting to continue higher off of currently? Do we have a daily fair value gap? Any discount rate right there? Well, this is the fair value area right here, which could be overlapping with that daily fair value gap right there, which could be interesting eventually. This area right here could be very interesting eventually, but currently, am I expecting Monday or Tuesday to retrace like this to then continue higher? For me, that's too big of a retracement to make to then continue higher off that. And I oftentimes mention that. What do I actually mean with that? That's too big of a retracement. Whenever we are close to a draw liquidity, price will not waste time to take out that target, take out the draw liquidity. So for example, if we want to take out this high right there, then price, ideally, we will not waste a lot of time taking out that high. We will do it quite fast. That's why when we get closer towards highs and we get closer towards draw liquidities, price action happens very fast. That's also actually what you see on daily fair value gaps, weekly fair value gaps, when we get entry confirmations. So when you get an entry confirmation, you are expecting what? A sharp turn to form, because the last price action is fast into the PD array to then out the PD array is fast again. Where the same thing happens here. Lows right there, they get taken out fast because price did not want to waste a lot of time. So right here, with that in mind, I also don't want to see a big retracement before we take out those highs, because then I would argue that we want to continue lower or we want to consolidate, either of those two. And either of those two is low probability. So I do not want to get involved in those things. So right here, this daily value gap is not necessarily something I would want to wait for. I would want to go into the 4 hour to already see if we want to continue higher off a 4 hour value gap right there. Let's say we do not get the entry pattern right there and we fail to continue higher initially off that 4 hour value gap. Then that is perfectly fine to then wait for a daily value gap to then continue higher off of that. But a retracement into this fair value area before we take out this high is quite unrealistic in my opinion. Can we retrace into that? Yes, but in my opinion, after we take out the high right there, not before we take out the high. So not right now retrace into that to then continue higher. If it does happen, we will react again. And then I would love to still get involved potentially. But gold overall is looking quite nice right here for higher prices. Then on Bitcoin. So Bitcoin, after what we saw last week, which again was another 50-50 area right here. Another 50-50 area, the weekly swing high, the daily value gap right there. Eventually we continued higher, did not come into the weekly value gap, which to be honest is not too crazy because we have is a variation breakaway gap right there. And if you study the candles, and it's what I referred to at the end of the video, of the previous video, the one candle tells you everything. Breakaway gaps in itself also can be told by those candles. So how those candles forms, how the third candle specifically forms right there. Where this, well, if you just knew about fair value gaps itself, you would see a fair value gap, which you would 100% expect to retrace into. Well, right there, I would argue that this is also a very interesting variation breakaway gap, because that wick at the bottom right there is telling us something. It's telling that it's displacing higher. It's displacing higher already somewhere right there. So small little details. So again, can you still wait for the weekly value gap? Yeah, for sure. You don't need to go into the 1 hour time frame to then look for the first long. But then eventually when we start to create new value gaps higher, that's perfectly fine to then get involved. So after we have this huge move higher, that sort of confirms the ID right there, right? Well, I would argue once we still have this price action, I would also still want to wait for the weekly value gap overall right there to be traded into. But once this happens, then it becomes quite unrealistic to then trade back into it to then continue higher off of that. But if we take a look at the next target, which was the weekly value gap right there, this is the last resistance area that we are running into before we reach all-time highs. That's crazy to say actually, that we were here we're basically, that's crazy to look back at. But anyway, this last resistance area, how do you want to go about that? Well, it's important to understand right here why we are seeing this price action. Of course, 2 candles of those are weekend candles, so there's less volatility in general. But overall, this is a resistance area right now. So the same as this is where we will stop for a moment, where we will consolidate for a little moment. So right here, ideally you want to wait for somewhat of a retracement if we get a retracement. And if we get a retracement or we already explode higher, then once we take out this high right there, price action will most likely be very fast, because this is where we have no resistance anymore. In other words, your no resistance run, low resistance liquidity run, as you might know it as well. That is what will happen above that high most likely. So in the meantime, I would also want to wait a little bit right here. If you're just trading spot, then it's a nice area to dollar cost average in as well. Overall, you don't need to be super accurate about your entry right there. You can just buy. Not financial advice. All right, on crude oil, let's see. Price action right here was overall just very ugly. Now we had one, was that this week actually? Yeah, it was this week. Yeah, this day right here, actually on Tuesday right there, that was the day I was taking a losing trade on Nasdaq. And it was a bit of a bummer because I was looking at crude oil right there and I knew crude oil was going to be nice and I did not trade it. So I was a little bit ashamed. Let's put it that way. Where we were very close towards that high right there, extremely close. That high is what we've been targeting overall. That high right there, we can deliver towards the high by this 4 hour value gap right there, which was beautiful price action to continue higher off that, to then target the high. Eventually volatility dies down as well. It was just beautiful price action overall. So it was a little bit of a shame that I did not manage to get involved right there, even though we mentioned it. Actually, it started earlier, where in the previous forecast, we mentioned this sweep right here. Now, why did we mention this sweep? Because we were confident about this drawn liquidity right there. So since we were confident about this drawn liquidity, that we are likely going to take out this high right there. Why that high? Well, we were not creating bearish value gaps anymore. And ever since we disrespected this daily value gap right there, we were expecting that high to get taken out right there. Which eventually, if we want to continue higher, then where can we continue higher from? Well, it's not usually fair value gap higher, but we do have a discount array in the form of the swing low. So we can sweep the swing low to continue higher off of that right there. Which eventually you can also wait for the 4 hour value gap. But that's why we sort of saw the sweep coming right there. And then from the 4 hour value gap, beautiful delivery higher. It's just beautiful. Anyway, let's not live too much in the past right there. At least for me. Let's go over the current price action, starting monthly again. Previous month's high right there taken out. I do think we can continue higher overall since we are disrespecting the monthly value gap. So let's see what we want to do with this swing high, which is currently still very far away, right? So overall, it's not super interesting just yet. We do have this first target, which is an ugly order block right there, which we can target. It's overall also an old fair value area, like we see. Then how can we deliver towards that? Daily value gaps in the making, which could be very nice, but on the 4 hour, we also potentially have 4 hour value gaps already higher right there, and this fair value area right there, which we can again continue higher from towards that fair value area sitting right there. So that could be very interesting as well. I do quite like this price action. Now, on Nifty, let me actually go over Bank Nifty. I want to go over Bank Nifty and I want to replace this with Bank Nifty. Let's see, Bank Nifty. All right, perfect. Bank Nifty. Let's see. On the monthly time frame, what are we doing? We mentioned that this could still continue higher overall after the previous month's low sweep, right? What we are seeing is we are respecting that previous month's low. So on the weekly, what are we doing? Weekly, we mentioned that if we want to continue lower, I remember this price action actually quite well. If we want to continue lower, this weekly value gap should push price lower. Where at this moment in time, we have nice price action supporting the ID right there. Then the next candle, this candle is already suspicious, by the way. If we're paying attention to the details, this candle is already extremely suspicious. Why? Because this is a respect candle. So what is it respecting? It's respecting a previous week low. Why is it respecting that? Then alerts, sort of alarms should go off in your mind with all things red in your brain with what's going on. This should not happen. Because if we want to continue lower, we should disrespect this counter raise. We should not respect this counter raise. So at this moment in time, that's already suspicious. And we mentioned actually that if we want to continue lower, we should continue lower right now off that 4-hour value gap right there, which we are not seeing. So that's why we marked at that high. And eventually, right here, well, actually, we got to move lower. We got to move lower right there. Excuse me. Then afterwards, we start to disrespect that, disrespect for value gap. Then the domino effect starts to happen. This high is now the target. After that high, since we're not following through, this high is now the target. So that weekly value gap is not relevant anymore. This high is now relevant. So that is then the target. After that, we're not following through off that for value gap. So then the next premium rate is the target right there. And then after that, the next premium rate right there is the target. So it becomes a domino effect, as in every block starts to fall right there. Every premium rate starts to fall, where we can then comfortably target higher as well. Now, very nice price action. We mentioned targeting this high. At least I believe we mentioned that. If I did not do that, I'm very disappointed in myself. But after that, we create a weekly value gap right there, which we can simply continue higher from right there. And this is also very interesting because if one weekly value gap does not push lower, that's perfectly fine. If the second fair value gap that is being created off of that, which right there is the bullish value gap, is created off of the failure of the bearish weekly value gap, then this one should hold, because otherwise we are in seek and destroy conditions. So it's a very easy thought process where if one side of the market, the fair value gap, does not hold, then the other side of the fair value gap should now hold. If that one also does not hold, then we are in seek and destroy conditions, because then both sides of the market are not holding. Now, right here, we can continue higher off of that, which beautiful rejection, beautiful rejection. So what can the next candle do? Previous week high, previous week low right there, can just continue higher, right? So eventually, where can we continue higher from? We have a very nice daily value gap sitting right there as well, which we can definitely see a sting into to then continue higher from. Very nice price action. I do quite like this. Do quite like this. To then continue higher off of that, to then target the next highs as well. That's quite interesting. Nice price action. I like it. All right, that is the forecast. That is the forecast. If you do have any questions, then please feel free to ask. Feel free to ask. I will go over, what's up, Royal? This is my first time joining. Welcome, welcome, Jeremiah. Welcome, welcome. Let me see. I will go over GBP, JPY, and EURGBP as well. Let me see. EURGBP overall, I've actually not even been doing forecasts, not even taking the time right there, because I feel like I'm just wasting my time overall on EURGBP, because the price action is just ugly. And if you struggle with bias, then the previous month's candle and the previous month's candle high, previous month's candle low is a great way to get to a bias. It's also a very desperate way of getting to a bias. So oftentimes in the mentorship, you'll hear me mention this, where I say, if I'm extremely desperate and I'm not sure what price action will do, of course, it doesn't mean that I only use that when I'm desperate. No. It's also a great method and I use it in every manner. But when I have no idea what price action is about to do, I do this, for example. So where I mark out the previous month's candle high and previous month's candle low, because those are easy targets. we're always going to trade towards either the previous month's candle high, previous month's candle low. So those are the easiest targets, the easiest thing you can do. So in a desperate situation where you're not sure what price will do, that's sort of the last resort. So right here, if we want to trade towards this previous month's candle high, then I think that's very realistic right here based on this candle formation currently, because we're simply closest to that. So how can we trade towards that? Well, on the weekly, do we have anything interesting? No, but it is also a swing high, which makes it a little bit more interesting. It's another premium array right there, which we can sweep. So on the daily, do we have anything interesting to deliver towards that? No. And that's why you can probably see when is the last daily value gap being created? Is that a daily value gap? All right, that is a very small daily value gap right there. All right, I'll take my words back. Oh, this is also a daily value gap. I'll take everything I said back. But overall, I think we can come to an agreement. The price action right here has just been ugly, very ugly delivery, not nice at all. So if we want to continue higher, we now need to go into the 4 hour. Wow. Beautiful consolidation price action. Beautiful price action if you are scouting for a consolidation. Personally, I'm not really scouting for a consolidation. I would love to see trending conditions so I can actually get involved. But right here, I also do not like this price action. It's very ugly price action, to be honest. So then I would need to go into the 1 hour to see if there's something interesting. Wow, that's very ugly price action as well on the 1 hour. And when I say ugly price action, it's just fair value gaps not holding. So here, fair value gaps, if you were to count every fair value gap here, 1, 2, 3, 4, 5, there's not one single fair value gap sitting right there that got traded into, respected perfectly to then continue higher off of that. It's all disrespected, all traded through, all candle closure inside, etc. It's all just messy price action. So here, if we were to continue higher, then would we take the first fair value gap higher right there? No, don't do that, please. That's just very low probability overall. If you want to trade this, where I could not come to one reason on why we would want to trade this, well, the drawn liquidity is quite clear. This high is quite clear that we're going to target that. The delivery is just very ugly. Then wait for one fair value gap right there. Wait for the sting into that and it being respected perfectly. So no candle closure inside of it. No weird big retracement right there. Just a nice candle trading into it to then a new fair value gap higher off of that. To then the next fair value gap is what you can trade. We need to gain that confidence. Price needs to regain our trust again, right? Price is sort of playing with us where it needs to regain our trust. We need to demand that off of price. It's very important. So overall, ugly price action. I would not want to trade this. GBJPY, let's see. It's a bit better, but I'm judging off the 4 hour right there. So not much to talk about just yet. Let's see. Why do I have that line there? What is that line? It's something on the weekly. It's the last weekly order block right there, which we could potentially target. Let's see what we want to do. We have a small weekly fair value gap sitting right there. This weekly candle is a little bit more difficult because I would argue that weekly candle is already displacing higher a little bit right there. So on a monthly, it's not too clear. Ideally, we do not want to trade back into this high because then we fail to create a monthly fair value gap right there. So on the daily, what are we doing? On the daily, we fail to create a bearish fair value gap whilst coming off of overall the fair value areas, etc. So it's a little bit more 50-50, but I'm leaning more towards higher prices actually right here. And we also have this sharp turn sitting right there. So if we can now get, and this is what I would want to wait for, this for me would be, I need to wait for this. I would want to see a new 4 hour value gap higher right there to continue higher off of that, to be comfortable to target the highs and eventually this drawn liquidity that we had right there as well. Could be very nice. It has potential, GBJPY. It has potential. There's potential in it. Could be very interesting, but wait a little more. I would argue. Let me see. What are we saying? What are we saying? Let me actually, I can turn on my face cam as well. I'm not too sure how I want to do that though. Let me see. Where is my face cam actually? Let me see. I'm going to turn on my face cam really quick, just so you have an idea of who you're talking to as well. Where is, yes. Aha, there he is. Sitting in a very dark room, actually. Let me turn on some lights. Let me see. Perfect. All right. Hello, hello, hello. Let me see. All right, perfect. So where were we? Where were we? Can you watch your stock? Maybe Nvidia. I actually, let me go over a few stocks right here. I updated my watch list actually. I added some more. Palantir right here was very interesting to me for a buy towards those highs as well, potentially all-time highs. Bank of America, also added this one to the list actually. Also quite interesting for short-term buys right here. Could definitely be quite interesting towards these highs right here. Then McDonald's right here was also quite interesting to me for short-term buys. Currently, I did not see that yet. Huge rejection lower. Let's see if that has something to worry about. Not just yet. Not just yet. We can still wait a little bit. See how we reject off of this area right there with the next few candles. Then Johnson & Johnson, which was also quite interesting for buys, short-term buys right there. But I can also go over Nvidia. Let me see. Nvidia. Yeah, this is always a little bit difficult. It would not be a buying opportunity for me. And the reason I say that is because, could you lower the music? Could you lower the music? I do not have music on, my friend. That's probably your own music. Or do I have music? I'm not aware that I have music on. So if I do have music, then you can correct me if I'm wrong, but I do not believe I have music. All right, anyway, Nvidia. So this personally would not be a buying opportunity for me because we are at all-time highs. So again, I do not like all-time highs for new buying opportunities, but we have a weekly fair value gap sitting right there, which we can continue higher from, which we have done perfectly so far. So right now, next target, very close target, I can give you that, is this previous week high. If we want to close above that previous week high, which we can again see if there's a sweep or run on liquidity, and that could be very nice right there. When we close above it, to then continue higher off that with a new daily value as well. But keep your trades short, I would argue. And with short, I do not mean bearish trades. I mean short time span trades. It's all good, Mark. It's all good. You had me questioning myself. I was like, do I have music? What am I listening to? But anyway, keep your shorts, keep your trade short time span. So very quick in and out. How your boxes and lines so straight and fixed to the spots on your trading view screen. They are always focused to the highs and fair value areas. Yes, it's a huge mind-blowing thing right here that I found out pretty late in my trading. So I was like talking about this. On the left side of my screen right there, you have the magnet. And the magnet, I use the weak magnet right there. The strong magnet is very glitchy. At least it used to be always very glitchy. The weak magnet is where if I now draw something even close to it, it will automatically draw it on the high right there. Exactly perfect. You can also turn this off by, for me, I'm on Mac, so that's command, but I believe it's control for Windows. And then it doesn't draw exactly on it. For lines, if you want to draw them straight, it's the same thing with the magnet. You can again turn it off and on. So you'll see it flicker right there if I press command. Then right here, if I want to have the exact line right there, then I press shift and it draws it straight right there. So yeah. On phone, it's a little bit more difficult though. On phone, it's a little bit more difficult. And after hour, it's already at 8:26. Let me see where's it currently at. 8:23. Yeah, that's crazy. 8:26. Yeah, then it already took the high. Yeah. Okay. It's very interesting. That's very interesting. That's very interesting. Was that photo framed on your back? That is actually just it's a whiteboard. So I write down what I need to do. I currently have written down just spring enrollment actually. There's spring enrollment on it. Do you believe the algo has been changed recently to target SMC traders? With all due respect, I do not think SMC traders are good enough to actually be targeted. And the reason I say that is because I think our liquidity, or well, in general, I talk about in general SMC traders, the liquidity is too slim, is too a drop in the ocean for it to actually be targeted. So I do not really think it is being targeted, in my opinion. But of course, if you find, people always find signs, as in they will go looking for signs. If you go looking for signs that we are being targeted, then yes, we are being targeted, right? So that's just the thing. But I think it's more of a marketing thing, where if I say something like ICT SMC doesn't work anymore, but I have the perfect strategy to avoid that, so please buy my course. It's a great marketing thing. Where of course market is changing, as in market just has subtle changes overall, but is it targeting SMC? I think it's almost very egoistic, very delusional for us to say that we are being targeted. Yeah, no, I don't think that. But yeah. Hey, are you still looking for a native Mandarin speaker with basic Photoshop? If you want, yes. You can, if you're a native Mandarin speaker, then please feel free to reach out to info@ario.io and simply mention, I'm a native Mandarin speaker. Are you still looking for someone like me? Yes, that could be very nice. Thank you for mentioning that. How's Colombia, and are you in Bogota or Medellin? I'm in Medellin, and Colombia is nice. It's quite nice. I like it. It is nice. It has treated me well thus far. I wanted to ask you if you got any new playlists scheduled to upload, like Mark Mastery new chapter. Yeah, it's a great question. And previous video actually went into REO exclusive. So it's not a specific playlist like I'm guiding you through something. The videos still build up onto each other, as in the previous video still makes more sense if you watch the next video, etc. But it's more so individual videos. So REO exclusive is currently the playlist that we are going off of, where we're sort of going where we left off before market mastery, if that makes sense. Have you thought about adding more transparency to your trading updates? Sharing daily P&L, account visibility, and comprehensive trading stats could provide valuable insights for your audience. Yeah, for sure. That can be very interesting. There's two sides to the coin, and the things you mentioned, I think, are great. I think daily P&L is something that is just... the thing is, you need to see it from my perspective, right? And I hope it doesn't sound like an excuse. But if I want to build a great educational company, which has always been my goal, who are the people that I want to attract that will actually succeed? Are those the people that are only interested in how, for example, the video that performed the best was the video how I made 13,000 in one day. That tells you a lot on why that video performed very well. Where the videos that are actually valuable usually perform a little bit less, which again shows you the state of the trading industry, shows you the state of the trading community, which is also why a lot of people are not profitable. So if I want the best traders in the community, Then, do I want to attract traders by showing my P&L, or do I want to attract traders by showing how valuable information I can give you? And that's two sides of the coin. But for example, the thing you mentioned where the stats could provide valuable insights, 100% agree with that. But for that, of course, I do not need to go over a P&L, I believe, where the RR is more valuable overall. But that's definitely something I share. And that's definitely very interesting, yeah. For sure, for sure. That's a very good point. That's a very good point. 100%, 100%. Let me see. This week I'm more confused about on the crosses. What do you think about Canadian dollar CHF to continue higher on Monday after CPI? Let me see. Canadian dollar CHF. Canadian dollar CHF. Yeah, this, let me see. Weekly on Monday you mentioned, right? Or do you think, which was this week? Let me check. Ah, this week. Okay, no. Okay, that makes sense. Makes a lot more sense. No, this is quite interesting actually. Overall, weekly value gap, which we're coming into, weekly order block as well. Perfectly, very nice rejection actually, very nice rejection. So on the daily right here, we can just look to continue higher right here as well. We're on the 4 hour. I do not necessarily like when we have one big move higher. And what I mean by that, one big move higher is oftentimes seen as that we are actually going to move into that direction. That's not necessarily true. Where a sharp turn is also just one big move higher or lower. So in order to actually confirm that we do want to continue higher or lower, we would ideally want to wait for a retracement with a new fair value gap, because that confirms that PD rates are actually holding. Where one big move higher or lower is oftentimes also used as manipulation. So be wary of that, be aware of that. If I would want to get involved, I would ideally wait for a little bit more confirmation. You do not need to get involved on Monday. CPI in this regard, you can trade CPI for the crosses, most of them. Of course, if it really depends on the context. And I always say this because if I was trading the 1 minute time frame right here ahead of cross CPI, will I still experience slippage if I enter like this with a stop loss of not even 1 pip? Then yes, of course. So that's still very important. But in general, it is more fine trade than US dollar CPI, if that makes sense. Let me see. Do these concepts work on synthetics too? They do, but I have dealt with someone before that was trading synthetic shares, I believe, or what was it? I'm not sure, but it was something where the price action was made up. And be aware of that. I do want to know what is actually behind the price action, what is happening, because if it's just made up in a sense, it's not real price action, then, and I'm not sure if we're talking about the same thing right there, but be aware of that, because then of course it will be very different. Thank you, John. Thank you. I appreciate that. Thank you. Yeah, good traders talk about percentage, not P&L. Yeah, I agree with that. I agree. Yeah, it's yeah, it really depends. There's so much going into it, but anyway, that's true. Let me see. I don't know really what you have in your premium lessons. What you are teaching us for free is more than enough. People like you are very, very, very rare. Thank you. I appreciate it a lot. Yeah, it's more than enough. Believe me, the free stuff is more and more than enough. But usually the thing is, I tweeted yesterday that usually free things don't get taken too serious. That's the thing. And if you do take them serious, it's more than enough. And again, the mentorship is just, it's also important always to mention, mentorship is just a shortcut, right? It's meant to be a shortcut, because then you learn it faster. But if you do not have the money, you do not want to make that investment, that's perfectly fine. I'm not forced to sell you the mentorship. No, you can just simply follow the YouTube. That's it. Let me see. With the 15-month per month subscription, do we get the full strategy with entries and risk management? Yes, you do. You do. You do. Yes, yes, yes. You do. You do. Let me see. Start breakdown of your own trades. Yeah, I thought of that actually. That could be very interesting. That could be very interesting. I thought, but I'm not sure how to approach that in a good way. Is it enough to just use fair value gaps for bias? Yeah, for sure, for sure. And I think it really depends on the time frames you're using. Because if I were looking at the monthly right here, just at the monthly, then fair value gaps alone might not be enough, right? But then you could argue you can just go down one time frame into the weekly where you do have fair value gaps again. So fair value gaps in general, you can do anything with fair value gaps. You can get to a bias, you can get to a narrative. Anything can be done with fair value gaps alone. We need a psychology lesson how to handle losing streak, how to overcome self-doubt. It's a process. And a losing streak sucks. It's never nice, a losing streak. Wait, let me address this first actually before I forget it. What about the giveaway? Yes, the giveaway winner is Lucas. Lucas with a K. I'm not sure if he's here. I'm not sure. Derek, who's my assistant, has reached out to him, has given him the lifetime. If you are Lucas, and if you did win, then please check your email. Please check your email. But losing streak is, what can I say? Losing streak is difficult to deal with because it's a lot of patience going into it. And what I mean by that is usually people do not have enough patience to even get over the losing streak. A losing streak happens, and the first thing people usually do is they go into a new strategy, go into strategy hopping cycle, which they don't even get the chance to see a new winner from that same strategy, which requires patience a lot of the time. That new winner will come. That losing streak is there simply to teach you something. So a losing streak oftentimes is just there to gain experience from. Meaning there's likely loss that you shouldn't have taken right there. Are there losses that you were unavoidable almost? Yes, for sure. Most definitely. But there are also losses, I can almost guarantee you that were just unnecessary losses. So you can learn from that. And learning from that is extremely valuable because the next time it will not happen. And next time the losing streak will be less. And then after that, the losing streak will be less again, which eventually leads to no losing streak anymore. Of course, that's an exaggeration. Will you always have a losing streak? Most definitely. But the losing streak will be a lot less than before. Make sure your risk management can allow you to survive that losing streak where you do not blow the account. So you can still be comfortable in that losing streak as well. Comfortable to a sense, because for your psychology, you will, like you mentioned as well, you will self-doubt most likely. And self-doubt is something natural, I would say, where a week like this, for example, a week like this is very difficult because I was more wrong than I was right in this week. So when I'm more wrong than I'm right, I also start to doubt myself a little bit where I'm like, okay, I'm quite often wrong in this market. And I do not necessarily think that you are wrong. You're just not in the right place. Do you know the what is it? It's like a quote where in some places at the airport, water is very expensive. In some places, water is very cheap. It does not mean that water is just invaluable. It just means that you're not in the right place. You're not in a valuable place for you, which is the same in trading. If your trading plan is not working in some environment, then that trading plan is not meant for that environment, most likely, which this week, my trading plan simply said is not meant for this environment. So I just need to find an environment where trading plan is valuable. So that's very important as well. That's very important, I believe, if that makes sense. And eventually that self-doubt will also go away a little bit more. And self-doubt is also helps a lot. Look at how far you already came. Look at all the winning trades you did take. Don't only look at I'm losing right now. No, you also came from a winning spot. So remember that, right? What is the difference between the YouTube videos and the essential mentorship? It's I like to sum it up in 3 things. It's information, implementation, and it's a shortcut. That information, the implementation leads to a shortcut overall. So the information is a little bit more, as in you're getting more information, you're getting more detailed information on certain things. That is implemented better, where in the YouTube it might be a little bit vague sometimes. And that eventually leads to overall a faster understanding, if that makes sense. For more details, it's also on the website if you're interested. Hey buddy, I saw your different videos. Always thankful to you for educating people. Thank you, thank you. I want to enroll in summer bootcamp for 4 months. Please tell me the fee required for that enrollment. You would have to go to the website, which is ario.io, and you can also reach out to info@ario.io right there, and we will go over it. Depends on the package, etc. So it really depends. How do you handle big PD raise on the 4-hour, and we get into it for a long time on the 50-minute? How do you enter? Big PD raise is difficult. It's difficult. I'll be honest about that, because big PD raise are a little bit annoying because you do not have the exact boundaries to look for a pattern. Where what I mean with that is this weekly value gap is not that big on a weekly basis. But if I were to confirm this, and it's the same premise on the 5-minute, then the weekly value gap is huge. So where am I going to confirm it? Well, this is where you ideally want to go up in time frames a little bit. That's why going up in time frames is very beneficial, because you only need one confirmation to say it's a holding, right? So I would advise, if you have a very big PD rate, there's no shame in going up in time frames a little bit, waiting instead of a 50-minute entry, waiting for a 1-hour entry, for example. Let me see. Tesla, for sure. Tesla, let's see. Tesla. Okay. Let's see. This is quite interesting actually, because we have a monthly value gap in the making. Yes, sitting right there. That monthly value gap is sort of a do or die. And what I mean by that is, if this monthly value gap does not push price lower, then we are taking these highs, we are taking these highs, we are most likely taking all-time highs. So it's like, if we do not push lower here, then we are at all-time highs. A crazy 100% increase right there on price. But right here, I would want to see what we want to do with this monthly fair value gap sitting right there. In the meantime, I do believe we have great signs that we might want to continue higher already, but this monthly value gap is definitely what I want to wait for right there. In the meantime, I can't really get a really accurate forecast right here, because I want to wait for this monthly value gap, see how we reject it right there. So next week, it could be very interesting, could be a total different world, potentially. A bank Nifty is, I went over it a little bit earlier. Indian market, yes, for sure. SMC works on Indian market, for sure. Nifty 50, hey, thank you, Surya. Thank you, I appreciate that. Not needed, but thank you, my man. Thank you, I appreciate that. Nifty 50 and or big block. I'll do both, my friend. For you, I'll do both. Let me see, Nifty 50. This is the one I deleted actually, right? Yeah, it's the one I deleted, that's funny. So the reason I deleted Nifty is not necessarily because I don't like Nifty. This has just been at all-time highs for a very long period of time. Overall, we had this monthly value gap right there. I want to see a retracement into that. We did not get that. So right here, I do believe we can continue higher a little bit, but since we're at all-time highs, it makes it a little bit more difficult. So my advice would be this daily value gap right there, wait for a clear retracement into that, to then have that new target, which would then be the high right there, to target that. That would be my advice. I would go about that. That could be very interesting. Let me see, big block. I saw something very interesting actually. Let me go over that in a little bit. That could be very interesting actually. I've never thought of that. Big block. Monthly right here. Monthly value gap in the making. So ideally, you would not want this to be a down candle, because then we might not create daily or monthly value gap. Weekly. Okay, that explains quite a lot right there. The nice expansion higher, because we are respecting a weekly value gap. So the next candle could just continue higher towards these highs as well. So this is a little bit more clear the Nifty. And the reason for that is because this simply had a retracement, right? So overall becomes a lot more clear. The 4 hour, we have this is actually very nice, to be honest. I'm surprised by this. 4 hour value gap right there, which we had a sting into, continue higher off of that. Close targets are these highs right there. And then after it's those highs right there. So on the 1 hour right here, is there a sting into it? Let me actually see. No, it's not. It's perfect equal lows actually. All right, we can continue higher off this already. Seeing what we want to do here. But for value gaps higher right now to target these highs, that's very interesting price action actually. Targeting eventually that high right there. That's very interesting. I do quite like this. Yeah, I saw this one. You mentioned it to someone else, Lucid Dreams and I'm not sure if I pronounced it right, Saye FX. Would you be interested in a Discord for YouTube students? That could actually be very interesting. Let me see how I would want to organize. I can't promise you anything, but that could be very interesting actually. That could be very interesting. And feel free to set it up yourself, right? Feel free to set it up yourself. You don't necessarily need me for that. Feel free to set it up. I will even, if you have it, then I might even promote it. Let me see. I have a question about the breakaway gap. Sometimes it's not aligned with anything and works perfectly. What do you mean not aligned, my friends? It's set it up, set the Discord. If you want, you can. I don't want to force you to do anything. Don't. That makes it sound very weird. But you can set it up. Feel free to send it to info@aryo.io, or at least if you tweet it out or something and you say, hey, this is the community for students. If you're interested in learning about Aryo concept, etc., then set it up and I'll try to see what I can do. I can always retweet it, etc., and give somewhat of a support. I will likely not be active myself though in it. But feel free to set it up and let me know. Let me see. I mean, your essentials. Love to see it. Love to see it. Love to see it. What is your screen time and how to manage it? My screen time on trading, I imagine, right? Reminds me of the Apple feature where you get the screen time update. But the screen time for trading, I would argue when I take trades, it's usually, my analysis is what, maybe 30 minutes. And the way I see it is this, right? I already did an analysis the previous day. So the previous day might actually be longer than the analysis that I do on the day itself where I'm trading. Because I set an expectation, and if that expectation plays out, then all I need to do is sort of act on the expectation that I had. Where that makes it very easy to understand high probability conditions as well. So my trading screen time is very limited. It's not long at all. Not long at all. It's maybe 30 minutes, maybe 1 hour maximum of screen time in a day. Where of course, where I'm actually looking to trade. Analysis, that's besides the point, I believe. Which trading plan would you recommend a beginner following this FEG strat? Yeah, that really depends. And there's one question that we would need to go over is what is your time schedule? Because if your time schedule is very busy, then I would argue go for more of a higher time frame trading plan. So of a Delirium, you might know Delirium trading plan that I personally use as well, where it's mainly looking at daily, 4 hour, weekly, and monthly right there, waiting for confirmation in those value gaps. If you have more time on your hands, then you can go into the 1 minute and you can use lower time frames as well. Still, of course, going over the higher time frame first, but then going over the lower time as well. So that really depends. All right, I have a question about red news. For example, FTMO does not allow trading in them 2 minutes before or after, nor exit at TP or stop. What do you do in this situation? I'm not sure if that is for the, I imagine that's a live account, right? For a live account in FTMO, that's true. They do not allow you to trade before or close the news. And in that situation, well, I would just stick to it, as in don't trade news. But It really depends, because I'm not sure which news is exactly restricted. They have an economic calendar for that, their own economic calendar, where they tell you which one is restricted, which one isn't. So I imagine not every red folder news is restricted, but correct me if I'm wrong. So yeah, take that into account. If you have a live fund account, then it's definitely something to take into account. Yeah, it is what it is in that sense, almost. Let me see. Like PD rates with breakaway gaps. Yeah, so when breakaway gaps don't necessarily need to overlap with PD rates itself. That's one way, that's one factor, one variable of how we can know it might be a breakaway gap. But by itself, it can already be a breakaway gap just looking at the third candle. So which one was that actually? What was it? Which example was it? Bitcoin, right here. Bitcoin is not necessarily overlapping with a PD rate right there for this to be a breakaway gap. But just look at the third candle, that can already be a breakaway gap. So it does not always have to overlap with a PD rate itself, if that makes sense. If I have one question about one of your previous videos with time, just to confirm, if I want to trade Australian dollar, New Zealand dollar, I only can trade on Tuesday, right? Regardless of price action the days before or after. Let me see. Can you see it? Yes. Australian dollar, New Zealand dollar. So yes, you would be looking at Australian dollar and New Zealand dollar news. So yes, you would only be looking at Tuesday and Wednesday though. And the reason I say Tuesday and Wednesday, Australian dollar news is very late during the day, right there, usually. Well, at least relative to your time zone, of course. But that means that Tuesday has volatility right there, later during that day. And at the beginning of Wednesday, and the whole Wednesday also has volatility. So be aware of that with Australian dollar news, JPY news as well, and New Zealand dollar news as well. So Tuesday and Wednesday can be traded right there. Let me see. If my rule is to risk 1% in every trade, I want to ask if I can open 2 trades per asset, each risking 0.5%, another using 1-to-1 risk to reward ratio, another 1-to-2 RR. Yes, you can do that for sure. That's perfectly fine. Only thing is, of course, that keep in mind that it might affect overall your outcome a little bit because you're using different risk to rewards. But that's perfectly fine. That's perfectly fine for sure. See what data is telling you as well in that regard, I would say. Which prop firms did you advise? I used to advise always and do your own due diligence, do your own research, etc. But the ones I have experience with and where I can say, all right, these are good. FTMO is just rock solid in my opinion. Then as well, Tradu for me is as well, all right. And then Funded Engineer for me as well, which might be a little controversial because Funded Engineer went through a lot. I believe Funded Engineer handled it really well, and I always recommended them. So I believe they handled it really well in that regard. So I would argue those. Just wait for the Funded Friends Discord, fellas. Of course, of course. What's up, Lucas? What's up? What is Funded Friends? Funded Friends is my own prop firm that is in the making as well. You can check out the link in the description actually. Is it? Or you can go to fundedfriends.com. Fundedfriends.com, and we'll keep you updated on it as well. We're actually working on it. We're making good progress, finally. Do you offer one-to-one mentorship? Fully one-to-one, where I talk with you, well, in the Discord, it's somewhat one-on-one, right? Or one-to-one, where we can talk in private, in the community, it's somewhat one-to-one. Fully one-to-one, where we go into Zoom calls together, etc. It's like, no, not really, not really currently. Will prop firm cheat your money? Well, no. No, well, it depends, right, on the prop firm. I'm not sure which prop firm you're talking about. Our prop firm, no. If I'm not going to talk to you on screen and set my whole name on the line to eventually scam you out of some money, that's too risky for my whole reputation in general. So no, that's not something I'm interested in. But some prop firms, yes, they will cheat you of your money. Some prop firms that do not want the best for you, I saw some problem actually. They had some problems in the prop firm space as well, but I don't want to mention any names. Don't want to throw any shade, but it's, I don't know. There's some weird things going on in the prop firm industry. So be careful. That's why I would recommend go for the known ones, where eventually, of course, I can recommend FTMO, and FTMO might do something crazy and might go broke or whatever it may be, right? So always do your own research in that. Don't just rely on everything I say. But yeah, go for the known ones, I would argue. Or even if we launch Funded Friends, right? Do you need to go exactly with Funded Friends from the start? If you do not trust it, no. Just you can wait. You can wait for us to build our reputation. That's perfectly fine. Let's see. I do not really have experience with funding pips, so I can't really say anything about that, to be honest. Baba can buy Baba. Let me see. I actually was looking at Baba this week, but for me it was not super interesting. It's not looking good, to be honest. Monthly value gap right there, which we're coming into to continue lower off that. So ideally, the next monthly candle right there is a down candle to continue lower. So just purely on that, I do not really like this opportunity right here. If we can start to disrespect and create new fair value gaps higher right here, could be buying opportunity. But overall, there are better stocks out there, in my opinion. I do not. If you're dollar cost averaging, you trust the company, for example, it's a whole different story, right? Then if you already bought at 260, then yes, just buy. I would argue. Then you don't really need that sign right there to buy. Then you can just dollar cost average your way in. That's a whole different story, right? But if we're looking at sort of actual trading part right there, then no, not really. Can you say something about fake tops and bottoms, because I tend to get trapped by them and stopped out before I would hit my take profit? It happens too often. Yeah, it's a funny thing because it always used to happen to me as well. Whenever you think the top or the bottom is the market, it sweeps one more time to then create the real top or bottom in the market. That's a general rule of thumb I have for myself. And what I mean by that is, for example, the fake tops and fake bottoms all have the same formation or similar formation, where it's one-sided price action. So we have one side right there, then it tries to sort of create a swing failure. Swing failure oftentimes, not always, but oftentimes, it's always a fake top, or it's also a fake top or fake bottom, where one-sided price action like this to then have a next sweep, and then the next sweep is the real sweep right there. So that's from my experience, at least. What is the reason breakaway doesn't act as a rocket? Because in itself, it is usually not a fair value gap. So it really depends on the context overall. But if we're talking about an actual breakaway gap, like that we're definitely not going to trade into, for example, this one right here, the reason it does not act as a rocket, because it also does not act as a magnet. So since it's not acting as a magnet, it can also not act as a rocket, because it's missing one part, right? You can't have dark without light, you can't have light without dark. So it needs the other one as well for it to be able to be a rocket. Funded Friends price, it's likely going to be, well, of course, nothing confirmed yet, but it's likely going to be cheap. Cheap. And cheap as in just competitive, cheap. Just a fair pricing. Let me see. Which platform are you planning on using for Funded Friends? We don't have anything confirmed yet, but most likely leaning towards MT4, MT5 if still available. And for US as well, daytrader, most likely. I definitely want to, big fan of those. daytrader, definitely very reliable. DXTrade, didn't hear great things about them. Maybe they're still in the works, but... And TradeLocker is as well improving. It's improving, so it could also be interesting. But definitely want to go for daytrader. What is the reason for breakaway doesn't act as a rocket? I answered that. Sometimes it's really, I don't know. Sometimes I wonder if people have the audio on or not. It's like I answer questions and the questions get asked again. Like, do we have your audio on? Let me see. Let me see. Funded Peaks, a new firm just launched. Not too sure actually. Not too sure. I have not looked into it myself. Actually, I have not looked into it myself, so I'm not too sure. I'm not too sure. Would have to see. Would have to see. Would have to see. What will be the max allocation? Also not too sure, to be honest. Not too sure. I can't. Not too sure on the exact details just yet. Nothing confirmed yet. Let's put it that way. So it might even change still. Did you hear about quarterly theory for timing and what do you think about it? I believe some people do really well with the quarterly theory. Personally, I do not use it. I do not use it myself. So I'm also not super interested in it myself. Yeah, let me know. Let me know. Let me know about the Discord as well, and we will look into it. Will you make content for futures? Most likely, yes, 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 as well. Yes, 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 yes. What do we do about slippage? Move to another broker? No, no. It really depends. If it's reasonable slippage, then it might be legit. As in, there's a good argument for it, then yes. Then not a big deal. If you always get slipped on the 15-minute time frame, it's a little bit suspicious. If it's not rollover or something like that, then that becomes a little bit suspicious. That becomes a little bit weird overall. Yes, I always focus on the last range actually to get an ID. Yes, I do. I do. It's a good one. It's a good observation actually. I do. All right, I'm going to end it here, team. I want to thank everyone for being here as well. I'll see everyone in the next one. Next week, Saturday. It's far away. It's far away. Anyway, I'll see everyone at the next one. In the meantime, feel free to study the videos as well. They are extremely valuable, especially the last one. If you combine that with breakaway gaps, etc., the understanding, extremely valuable. All right, perfect. Thank you, everyone. I'll see you at the next one. All right, perfect. Thank you, thank you, thank you.